Hello everyone, welcome back to Upside Down Data. Today I want to give an update about HBAR and what our risk model thinks of its recent price action. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So if you're returning to the channel, you've heard of our upside downside potential indicator many times before. What I'm showing you here is the price history of HBAR over time, color-coded to the output of our risk indicator. So each dot is a day, and each day is color-coded based on the upside downside potential indicator output. A score of 5 means high risk, a score of -5 means low risk. And you can see, looking back over time, the risk model does a good job of identifying these high risk zones where distributing HBAR has historically been advantageous, as well as these low risk zones where acquiring HBAR had been advantageous. And one of the things that your eye might have drawn you to immediately is that we're in the green zone again. Now I should note this is the long-term version of our UDPI. So if you're not familiar with the recent updates and features that the UDPI has, one of the things that we can do with this model is have it care about different types of risk. We can say, do we care about long-term risk? So how HBAR is likely, how these moves are likely to develop over a period of months. So kind of these broad market cycle-wide moves HBAR puts in. Or do we care about shorter term price movements, things of these kind of more intraday or intra-week fluctuations? I'll actually show you what the short-term UDPI looks like in a minute, but here we're looking at the long-term, concerned more with broader movements. And my understanding with the HBAR community is most people are more long-term oriented, so I wanted to show this one first because it might fit that disposition a little bit more cleanly. So as I was saying, something I think is interesting to note here is that HBAR has actually re-entered the green zone, even with this kind of recent bounce back up that HBAR had coming off of this deep correction we had going into December. You know, HBAR had a pretty precipitous and quick correction that it put into, had a nice little bounce off that, but we're still kind of ranging below that point. We haven't really been able to decisively put broader moves to the upside. And so what the model has been making of this price action is it now thinks that the downside potential is starting to get more and more exhausted, and that there's greater upside potential that's realistic or plausible in the longer term. So over the next coming months, it thinks there's more upside potential than downside potential for HBAR. So that's something interesting to note, and it's getting to levels that are similar to what we saw back here in the summer. Now, I think what's kind of interesting about this is that if you look at HBAR's price action ever since about March of last year, you know, by and large, we've kind of been in a range. You know, slight uptrend, right? We put in a new all-time high back here last fall, and we put in a higher low than we were in the summer. So that's a macro uptrend, which is good. That's what you'd like to see. But by and large, it's been more or less sideways. But that's also remarkable in some ways. You know, there's some assets that never were able to put in a new all-time high since the spring. And so HBAR has kind of differentiated itself in some ways from some of those other assets, in that it has been able to put in a new all-time high since then, kind of a show of strength. And the fact that it's actually reaching a low level of risk at a higher price point than it was in the depths of the summer is also something that I think can be seen as bullish for HBAR, but just something interesting to note. And one of the things that I think is interesting here is that when you look at HBAR's price history over time, you might just see it as being kind of big moves and then a lot of sideways consolidation that precede big moves. And so if you see this move from the spring all the way over to where we are now, it's more or less sideways with a bit of an uptrend. You know, what that might be setting us up for, now this is speculation, so don't take any of this too seriously or too definitively at all. But, you know, might it be the case that we're kind of doing this sort of a thing again before we're ready to move back to the upside? And so just with some more volatility than we saw here, where things were a little bit more flat, here we've had these kind of nice dips and nice highs, but maybe we're now getting ready for a next leg up, and maybe that'll be the push when we can break this range to the upside and kind of really set a new range for HBAR to get into. Now that's all speculation, who knows what's going to happen, but certainly what we're seeing from the long-term UDPI does not disconfirm that possibility, right? The fact that we're kind of building up, we're consolidating, and we're getting into these green zones, it would not be shocking to see some upward movement, especially if the broader market were to move up as well. Now, obviously anything can happen. This is crypto. If the market keeps correcting or if there's a big dump, you know, HBAR could easily break down below. Maybe have to revisit some of these levels from the summer. But certainly I don't think it would have to do that. I think that we're getting to low enough risk levels that seeing this as a launching point would not be completely unrealistic to see some nice moves to the upside. But again, just my speculation. You should make your own decisions. None of that's financial advice, of course. So let's just take a look a little bit more closely here of what the raw output of the long-term UDPI looks like right now. So that's what I've done here is I've replaced the y-axis with the UDPI level across time. And you can see that we're getting down to the same kind of general risk area we were in during the summer. A little bit higher. We haven't quite got down to -3 yet, but we're in that general ballpark. And so again, this was the level that HBAR got to before it put in that nice move coming out of the summer. Might we be getting ready to do something again? Who knows? It'll be interesting to watch. But certainly UDPI is at a similar level. Now again, this does not preclude the possibility of further downside. There is further down that we could go that the model thinks is realistic. But it's basically what, in its mind, in the long term, it thinks that HBAR has more upside than downside potential, which for any HBAR holder might be a reassuring thing that the model, it'd be not good if the model were sitting up here, especially after the correction that HBAR has done recently. So to talk a little bit more about the short term for HBAR, I think it's useful to also then look at the short term HBAR UDPI and see what it thinks. And you'll notice just by looking at this how this model reacts more strongly to some of this kind of smaller volatility that we see here. It'll spike up. So for example, it spiked up in the red here. Long-term UDPI didn't get as worked up about that move. It you can see it kind of changing more rapidly with some of these movements, whereas the longer-term UDPI cares less about these intraday kind of volatility. It's not as concerned about that. It cares about the bigger sweeping moves that it's seeing in the asset. And so what I think is interesting to note right now is that, coming out into that big dip in December, the short-term UDPI identified that as being a pretty low-risk time in the short term. It was basically saying that it thought a bounce was quite likely, that this was kind of a unsustainable move to the downside, and that upside seemed very realistic in the short term. And that's exactly what we saw. But then the model started to get a little more uncertain as we got here, getting kind of up into these more yellow zones, a little bit unsure. But now it's actually flipped back to green, which might suggest that in the short term, it's again expecting more upside than downside potential. But certainly, there could be still more room to move down. And this is what it looks like if we graph it. So, we bounced down all the way to -4 in that dip in December, so quite low. The bounce followed that, as might be expected from that kind of a level. And now we're dropping back down into the, between -1, -2. So again, further downside, totally plausible from the UDPI's perspective here. Would not be shocking to see further correction. It would also not be surprising, though, to see upside movement in the short term either. So the model overall thinks that there's more upside than downside potential that's realistic, but that doesn't, of course, preclude the possibility of downside, but just is, saying in the short term, the risk-reward ratio is relatively favorable for HBAR. Now again, not financial advice, but just something to think about. So to talk specifically about where we are right now, I've pulled the exact levels of the HBAR UDPI. So for the long-term UDPI, we're at -2.26. So that's just basically saying that it thinks there is notably more upside potential than downside potential that's realistic in the kind of longer term and over the coming months. But certainly not impossible for HBAR to realize some of that downside potential. Medium term, this is a model I hadn't shown you before, but essentially this cares about moves that play out over weeks to months. So kind of not as, a little bit more short term than the long term, but not as short term as the short term, kind of in the middle. So kind of weeks to months here. And it's telling a similar story to the long-term UDPI. It thinks that there's more upside than downside potential that's realistic in the medium term for HBAR, but it's a little bit less certain than the long term. It thinks there's a little bit more realistic downside in the medium term than the long term thinks in the long term. But again, still overall favorable risk reward kind of thing it's suggesting. And we just looked at the short term UDPI, which is again saying that it thinks that more upside in the short term is realistic than downside, but not to preclude the possibility of downside. So none of that's financial advice, but that's just what our different versions of our upside downside potential indicator think about HBAR where it currently stands. So the final thing I want to do is just do a comparison to another asset that I think bears some similarity to HBAR in kind of approach, although I'm not trying to say that all of these are the same or comparable, and I leave it up to you to make your own decisions of which is a stronger project. But I think Algorand offers an interesting comparison point to HBAR for a number of reasons. One of the things that these projects both share is they have really strong development teams, they have really strong technology underlying them. They both are kind of marketed towards similar audiences, at least in my reading. That's how I kind of see them. Where I see these projects really marketing themselves more to enterprise, more to companies to be used. Not to say they're not marketing themselves to retail use at all or anything like that, but it feels like they're more positioning themselves to kind of enterprise, institutional use, or even use by companies. Like Algorand, for example, is doing work with various countries on different projects, and HBAR actually is as well. So they're kind of similar in that I see these as kind of enterprise blockchains, that they're decentralized blockchains, but they're kind of trying to get adoption by corporations, which, we'll have to see if that may end up being a very profitable decision on their part if, that ends up happening. So I think it's interesting just to see where Algo is and then compare that to where HBAR is. So Algo is actually a little bit higher across the board in its risk, so both in the long term, medium term, and short term. One possibility for this is that Algo had pumped a little bit more heavily than HBAR back in the fall, and so this might be kind of residual from that Algo had really kind of moved up so much further that it kind of accrued a lot of its longer term upside potential, and it's just kind of having to cool off from that. So negative 1.2 instead of negative 2.26. And same in the medium term, a little bit more risky in the short term as well. Short term, the model actually thinks there might be more downside potential that's realistic than upside, which is interesting to note there. And what I think is interesting with these projects, so, when you're deciding on what project to invest in, obviously that's all up to you. One of the advantages of having these different risk indicators for different assets is it does let you do these direct comparisons of one asset to the other and just say in the current time, which seems to be offering a better risk reward ratio than the other. Not to say, again, not financial advice, not to say that Algo is necessarily a bad investment or anything right now, but the model's perspective is that Algo might not be offering as good of a risk reward ratio as HBAR is. And I think it'll be really interesting to watch both of these assets moving forward, because as I was talking about with this enterprise blockchain kind of idea, one of the things I think is really interesting about that approach that's a little bit different from some of these other layer 1 blockchains is that it feels to me like a lot of other layer 1 blockchains are kind of really focused more either on retail or kind of DeFi, not so much on getting companies to use them per se, unless these companies are deploying these DApps or things like that. It seems like some of these other ones, I'm thinking of like Avalanche or Phantom, are kind of relying on just getting kind of the crypto natives, the people who are already kind of in crypto, want to use DeFi, things like that, getting them to adopt their platforms and to use them. And that's certainly been working really well for those platforms so far. They've been doing quite well in their price action. But one thing that I think is interesting about this more kind of enterprise approach that HBAR and, in my reading, HBAR and Algo are kind of marketing themselves towards a little bit more, is that this might be something that in the long term really sets these blockchains up for long-term use. Think about it. If a company incorporates one of these decentralized these blockchains, one of these, well, HBAR is not a blockchain. Let's just say one of these layer 1 protocols into their workflow, then it becomes a lot less likely that they're just going to abandon it, right? If you're using HBAR, if you're using Hedera Hashgraph as something that's integral to your company, you're probably just going to keep doing it unless there be some really strong reason to change. But, assuming that HBAR is able to keep its technological kind of moat, its really strong tech underneath it, same argument would go for Algorand, then it seems unlikely a company would just ditch it on its own. So it'll be interesting to watch. It could be the case that as these blockchains get more, not blockchains, as these protocols, Hedera Hashgraph is not a blockchain, as these protocols gain more adoption by enterprises, it'll be interesting to see what happens to their valuations. And it could be that these assets end up becoming a little bit more stable than some of the other ones, where assets like Avalanche or Phantom or even Solana or some of those, there's some volatility baked in just in terms of how much people are using those blockchains for things like DeFi, where people will rotate in for a while, then they'll rotate out, and they'll take all their money out, and that'll drop the price because there's less demand for their native token. But if a big kind of core of companies start using protocols like HBAR, like Hedera Hashgraph or Algorand, it's possible that they might end up being a little more stable long term. Now, this is just me speculating. Who knows what's going to happen? So, take all that with a grain of salt. Just something I wanted to end with. There's some thoughts I've had recently about these assets, and I think they'll be really interesting to watch over the coming, months to years, just to see how they develop from that perspective. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with UDPI, we're all going to make it.